Back with closing trades, and before the break, we were flagging off the record low level that the rupee has hit, and it's fallen slightly more after that. 92.57 is where we're at right now. Let's get into conversation with Naveen Mathur, Director of Commodities and Currencies at Anand Rathi Share and Stock Brokers, to get a better sense of what is leading to this fall in the rupee that we're seeing. Naveen, hi, good afternoon. Good to be chatting with you once again. Talk to us about your reading on the level of the rupee, what has led to this fall. And recently we have seen RBI taking action to try and harness this fall. Do you think that action is not enough? Does more need to be done? What is leading to this fall, first of all?
Thank you very much for having me on the call. The rupee is at a low. It hit a new low at around 92.63 just now. I think the major trigger was the news just came in that the India forex reserves, excluding gold, are now just enough to cover 8.7 months of imports, the lowest in the last 3 years. And the RBI intervention in the currency market to shield the rupee is really weighing on the nation's foreign exchange reserves. So I think in spite that, we have the good amount of foreign exchange reserves. The built-up is there. But since the oil has retreated from the lower levels on the upside, there is a kind of, I would say, a dilemma in terms of understanding with respect to the RBI intervention to hold the depreciative rupee in terms of the dollar.
Okay. Naveen, I wonder how much of pressure can we expect on the rupee going forward, especially given the fact that you've already got oil at $100 a barrel. And of course, while the percentage in terms of percentage of GDP of oil import is lower than maybe what we were at 15 years ago, it's still a significant component of that current account deficit. I'm trying to understand if we could continue to see the rupee slide, and that's just par for course, and if so, to what extent?
Okay, so there are two factors which everybody needs to watch out for. One, definitely the geopolitics. So that means if the WTI or the crude does not get a breather in terms of their prices against the barrel, then it would be a problem, a continuing problem, as we all know that around 85% of the crude we import. And if the crude is around $100 or plus $100, then the sentiments would be negative for rupee because of our imports and the import bill, which would impact the current account deficit. The second point we need to appreciate is that in the current geopolitics, the dollar has started gaining, and the dollar index has touched 100 level from the lows of around 95.55 around a year back. So we are on the dollar index as of now at 99.597. So we are close to 100 or touching 100. So the dollar index appreciation also is the factor which is creating a pressure on the rupee against the currency.
Okay, Naveen, appreciate that take, and thank you so much for accommodating our request and joining us on the show with your outlook. Thanks so much. Okay, then.